Hey, guess what? You want to hear about the economy? Bo, guess who we're talking to today? Elliot Eisenberg, PhD.
Nice.
A guy who knows a lot more than I do. That's what it really comes down to. Elliot, thanks for taking our call today. Thanks for talking to us about the economy and the Denver market.
My pleasure. Happy to do it.
Great. What can you tell us? What's going on with the Denver housing market?
My gosh, the Denver housing market's utterly on fire. National data came out today, and it said inventory had declined from, I think, 18 days to 17 days. But in Denver, it's something like 6 days. Yeah. So your inventory is a third of what it is nationally. And nationally, this is an all-time low. So as tight as it is nationally, it's much tighter in Denver. Prices are much higher. Bidding wars are more severe. Sales price to listing price is higher. It's over 100%. Barely, it's way over 100% where you are, 103, 104. These are ridiculously high numbers.
Exactly. We're definitely seeing that. Bo, are you seeing that too with your buyers and sellers?
Oh, 100%. My buyers are frustrated. Elliot, what could you say about maybe what's going to be happening in the future with real estate and possibly inflation and mortgage rates? I'm very curious about that and what I could tell my buyers.
Understood. Yeah. In terms of the housing market, I think we are beginning to see some signs of some mild increase in inventory. Inventory we may have seen the worst of inventory, how low it is. It may begin to get a little bit better going forward. There's some seasonality that normally happens. Inventories normally rise the first 6 months of the year and contract the last 6. We haven't seen any growth yet, but now this past month, April data came out yesterday from NAR, or today, I'm sorry. We should begin to see some. We're seeing a little bit now. Now, I'm not sure why, if this is purely seasonal or if it's also a manifestation of high prices, lack of inventory. Buyer demand is still strong, but it's also could be a case, and likely, that as COVID starts to recede from the headlines, sellers become willing to put their houses on the market. And as such, we may begin to see inventory rise for that reason. And I think that's what we're starting to see, some of that and some seasonal behavior as well. So I'm optimistic that this increases inventory, the rise in inventory dampens at least a little bit the house price appreciation rates that we're seeing. It may not happen right away, but I suspect that maybe by year end or early next year, we begin to see a little bit of slowdown in the appreciation rates from double digits down to, say, mid to upper single digits. That would be all in all a good thing. This is a market that's getting a little ahead of itself. Not so great. On the inflation front, we face two types of inflation. We face base effect inflation, which compares inflation prices today to prices 12 months ago, the base of the period. So a year ago, we were in lockdown and prices for airplane tickets were free. I mean, Delta gave you a free airplane pretty much with every airplane ticket purchase, right? Yep. So if you compare airplane ticket prices today to a year ago, they're much higher today, but they're not high today. It's that they were ridiculously low last year. So that base effect inflation will go away over the next 3-4 months, because by last July or August, prices kind of began to return to some semblance of normal-ish by year end, certainly. The other inflation that we're facing is real shortages, the bottleneck inflation, right? It's hard to get labor, it's hard to get supplies, it's hard to get parts, it's hard to get material, and so on. That inflation is manifesting itself right now, where prices are higher in May than April and higher in April than March. That inflation is what's spooking markets a lot more. And the fear is, hey, this might become serious and self-fulfilling. The prices go up, and when we raise wages, and then the wages force us to raise the price of the good we're selling, which causes wages to rise, and you get the idea. It's a vicious cycle. Yeah. I'm not convinced that's the case. The central bank is certainly not convinced it's the case. The central bank has been telling markets to relax. So over the last month, we've seen inflation numbers that we haven't seen in the last 10, 20 years, yet the 10-year Treasury has slipped by about 10 bips. From 1.7 to 1.6 roughly. So the Fed's done a pretty good job of guiding the market into what it's going to do and what its thinking is on inflation. But I would watch the month over month inflation much more closely than the year over year inflation, because year over year is going to get you that base effect stuff, which we don't care about. But the month over month is the real bottleneck inflation, which we care a lot about. I don't think either of them are a real story. They'll be around for a while. They'll go away. But that said, who knows what's going to happen? Markets make fools out of all of us.
So basically, in a nutshell, as if we were talking to our sellers, right now is still the best time to put their house on the market to get it sold for the highest price.
Oh my God, yes.
Yeah.
Oh my God, yes. This is the greatest sellers market any of us have ever seen in our lives.
Yeah. Yeah.
This is a spectacular time. Don't hold back. I mean, the only reason they're going to hold back is they have nowhere to move to. That's the problem that sellers have.
Yeah. That's definitely been everybody seller that I've talked to has said, what am I going to do? And we try to push them towards new construction, but that's being kind of funny now, like you just said, with the cost of lumber and the, inflation, everything going on. They're even kind of hesitant as far as even contracting on houses right now, just not knowing what the cost of that house is going to be, 12 months down the road when they finally build it. So.
Correct. I mean, and it's also existing new home sales are peaking out at about 900,000 or something like that a month. Maybe it's a mill, but that ballpark. And the reason is builders have already pre-sold so many homes. They can't do anymore. I mean, you can't have a buyer and sign a contract for a house and then you tell them, oh, well, I'm not going to start your house for 10 more months. That's
Right.
not very helpful. So home builders really cannot, and there's not enough workers. They're facing a severe worker shortage, a land shortage, input prices are skyrocketing. So they're really pedal to the metal, and they're only producing enough to barely keep up with demand. But there's still a deficiency of 5 million units that was developed over the last decade since the end of the housing bust in 08, 09. So there's still going to be this terrific shortage of units out there.
Yeah.
What about with forbearances and evictions? Do you see that kind of maybe balancing out a little bit, or is that going to?
In this case, the answer is regrettably no. I don't see forbearance being a real problem at all. And that's because that they'll just extend the forbearance program. The forbearance program has already shrunk. The total number of houses in forbearance, I think, peaked out at about 4.7 million back in March, April, when the program started. It's now fallen to about 2.1 million, and it's steadily declining month over month. So the program's supposed to end of June, if I'm not mistaken. But it wouldn't surprise me in the slightest if President Biden gets whoever's in charge, I think it's Mark Calabria at the Federal Housing Finance Agency, if I'm not mistaken, to extend the program for another 3 months or 6 months. President Trump spent trillions of dollars already, $3 trillion in total in 2 different stimulus packages during his presidency. President Biden's added $2 trillion more during his presidency so far. We haven't done all this, and PPP loans and EIDL loans and so on, to see millions of households knocked out of their houses. But even if the worst comes to pass, and the program ends in the end of June, and there end up being, say 2 million or 1.9 million households in forbearance at that point, and they get kicked off the rolls or whatever, that's not a big deal. The housing demand is profound. A, house prices continue to rise on a monthly basis. B, so the banks or whoever's going to foreclose on them isn't going to be in a rush to put these houses on the market. C, the homeowners who no longer are paying the mortgage because they're in forbearance have home equity in their house because the appreciation rates have been so fast. So whoever's going to take the house over from the non-paying, now non-owner, if you will tell the person, the family they're going to kick out of the house, look, keep your house, keep it nice. Don't rip out the copper wiring and sell all the appliances. And we'll give you a check for your capital gain when we sell the house from under you. So this isn't going to happen quickly, and no one's going to maltreat the house. You're not going to have millions of houses rushing onto the market because sellers are desperate to get rid of the stuff fast. The people taking the house back. So the mechanics here are staggeringly different than they were in 06, 07, 05, 06, 07. So I don't see millions of homes coming on the market at all. The contrary, there's no rush for these repossessors, if you will, to take these houses back in a hurry and dispose of them in the courthouse steps. These houses are very valuable commodities right now.
Yep. Excellent. Well, I really appreciate your time and reading your bio and about you. It says you've been to 49 of the 50 states. So what's the one state you haven't been to? Don't say Colorado.
Maine.
Maine.
It's killing me. It's killing me.
Really? I think you should make that on your bucket list. Get there this year. So
This year it will be on my bucket list. It will.
There you
I've
go.
got to end this. This must end. This drought has to end.
Mr. Eisenberg, thank you very much for your time. I really appreciate it. Everyone have a great weekend. Enjoy that beautiful weather out here in Colorado. Hope to talk to you again, Mr. Eisenberg, real soon.